Overview of selected key amendments made by Finance Act 2025 and Taxation Law Amendments Act 2025. This edition of study material on direct tax laws and international taxation has been meticulously updated in line with direct tax laws as amended by Finance Act 2025 and Taxation Law Amendment Act 2025, along with significant notification and circulars issued up to 31 7 2025. It is specifically Uh, and significant notifications and circulars up to 31/7/2025 has been incorporated in this material accordingly. The content included tabular presentation, diagrams, flowcharts, etc. have been added, deleted, modified on the basis of provisions of direct tax laws applicable for assessment year 2026-2027. Additionally, examples, illustrations given during the discussion, significant case laws of Supreme Court and High Court rulings forming part of discussion or contained in questions and tabulated at the end of each chapter and test show knowledge questions have been updated, deleted, or modified in accordance with these amendments. While the amended provisions are distinctly highlighted in, okay, we'll leave this default tax regime 115 BAC. Okay, default tax regime. Just remember default tax regime. The section number is 115 BAC. The tax slabs under the default tax regime have been restructured as follows: up to 4 lakhs nil, 4 lakhs to 8 lakhs, 8 lakhs to 12 lakhs, 12 lakhs to 16 lakhs, 16 lakhs to 20 lakhs, 20 lakhs to 24 lakhs, to about 24 lakhs. 4 lakhs is the difference. Okay, 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, about 24. Up to 4 nil. Okay, the difference is 5 for everything. Up to 4 lakhs nil. 4 to 8 lakhs 5%. 8 lakhs to 12 lakhs 10%. 12 lakhs to 16 lakhs 15%. 16 lakhs to 20 lakhs 20%. 20 lakhs to 24 lakhs 25%. About 24 lakhs 30%. Increase in limit of rebate under Section 87A. The limit of total income from claiming rebate under Section 87A is increased from 7 lakhs to 12 lakhs and corresponding 7 lakhs to 12 lakhs and corresponding the limit rebate increased from 25,000 to 60,000. It implies that tax liability of resident individual who is paying tax under default tax regime having total income up to 12 lakhs excluding income at special rates of under section 111A, 112, 112A, etc. will be nil. Marginal relief will still be applicable for income marginally higher than 12 lakhs. Income on redemption of ULIP, unit linked insurance policy. To rationalize the provisions for unit linked insurance policies, ULIPs uh, to which exemptions under Section 1010D of Section 10 does not apply. It is classified as capital asset under Section 214, and profits and gains from redemption of such ULIPs shall be charged to tax as capital gains under Section 45(1)(b). Definition of equity oriented fund is also amended to include all ULIP to which exemption under Section 10D of Section 10 does not apply. Revamping of capital gains. The provisions of period of holding for classifying capital asset as long term and short term, indexation benefit, tax rates for capital gains under section 112, 111A and 112A, etc. have been amended by Finance Act 2024. Certain amendments were applicable with effect from certain dates like 23/7/2024. Accordingly, both pre and post amended provisions were discussed in this unit. However, for May 26, September, and January, the relevant previous year is previous year 2025, 2026. Therefore, this chapter has been revamped to reflect only post amended provisions. Exemptions from withdrawal from National Savings Scheme. Section 80 CCA provides for deduction for any amount deposited in the National Savings Scheme. No deductions would be allowed in relation to which such deposited on or after 1/4 1992. The NSS 1987 accounts are still operation. However, due to notification dated issued by Ministry of Finance to National Saving Amendment Rules 2024, the balance at the credit of the subscribers of national schemes on or after 1st October 2020 would not earn any interest. You would not earn any. Consequent to this notification, deposited who intended to leave their NSS balance untouched for future use will lose benefit and will be compelled to withdraw balances, making this amount taxable. Section 80 CCA has been amended to provide exemptions to withdrawal made from national savings schemes on or after 29th August 2024 for any amount deposited under the scheme, interest accrued thereon, in respect of which deductions have been allowed. Parity in provisions related to carry forward of losses in case of amalgamation. Deductions under Section 80 CCD for contributions made to NPS Vatsalya, which 80 provides an additional deduction of up to 50,000 in respect of contribution made by an individual to National Pension Scheme. The scope of this subsection have been extended to include NPS Vatsalya account. Okay, so all this deductions under 80 for Unified Pension Scheme. Extension of terminal date for setting up startups eligible for claiming deduction under Section 80 IAC. Expansion of tonnage tax scheme benefits to inland vessels. Increase in period of registration for smaller trusts or institutions. List of persons specified under Section 13(3) rationalized. Registration not to be cancelled for minor default. Abolishment of equalization levy. Online advertisement have been abolished. Reduction of tax, TDS, and tax collection at source. 194D insurance existing revised 2%. Income in respect of investment in securitization trust. 25% if payee is individual or HUF, 30% otherwise. 10%. TCS on timber or any other forest produce not being tenure leaves obtained under forest lease, 2%. TCS on remittance of LRS for purpose of education, financed by loan for financial institutions referred in 80E. It is now nil. Increase in threshold limit for deduction or collection of tax at source. 193 interest 10,000. 194 dividend for individual shareholder 10,000. One interest on other than securities 1 lakh for senior citizens 50,000 in case of others. 194B winning from lottery and crossword puzzles 10,000 in respect of single transaction. Winning from horse races 10,000 in respect of single transaction. 194D insurance commissions 20,000. 194G income by way of commissions, price, etc. on lottery tickets 20,000. 194H commission or brokerage 20,000. 194I rent 50,000 per month or part of month. 194J fees for professional or technical service 50,000. 194K income in respect of units of mutual fund or specified company or undertaking 10,000. 194 LA income by way of enhanced compensation 5 lakh. Remittance under LRS and overseas tour package 10 lakhs. So all these things, so TDS is a very important chapter. So first preference will be TDS for May 2026 exam. So we'll start with TDS. No TCS on sale of goods, removal of higher TDS for non-filer of return of tax, extending the time limit for updated return, non-applicability of 271B of the Act, amendment in key provisions of block assessment for search and acquisition under chapter, time limit to impose penalties rationalized, exemptions from prosecutions for delayed payment of TCS, obligations to furnish information on transaction crypto asset. So all these things, parity in long-term capital gains. Introduction, rationalization of transfer pricing provisions for carrying out multi-arm price determination, introduction of presumptive taxation for non-resident, providing electronic manufacturing facility. So, these are the overview of amendments applicable for May 2026 year final exam. Thank you.